Moving back here to focusing on CPI, as we mentioned, the core number coming in hotter than estimated, rising by 0.5%, even as headline inflation on the consumer level remained unchanged, 0.4%. Let's bring in PIMCO Managing Director and economist Tiffany Wilding now to discuss this. And Tiffany, as we've been discussing, the Fed always has a tough job, but perhaps even more so now, where we're seeing inflation is still relatively hot, still accelerating, and now we have the SVB mess. What do you expect all of that to equal when it comes to the Fed?
Yeah. So I really think that it's all about how much financial conditions have tightened as a result of some of these bank failures, I guess, over the weekend. And that's something that the Federal Reserve is going to have to try to understand. The way their monetary policy works, obviously, is through the banking channel and broader credit markets. And, the question is, will you see credit creation as a result of this news, really start to decline? And ultimately, that's what the Fed wants. They want this sort of easing in credit conditions or credit creation to cool off demand in the economy, cool off inflation. But nevertheless, they don't want that to happen too quickly. They don't want the economy to sort of plunge into a recession. So that's really going to be kind of the balancing act that they are going to, to try to have here. I think inflation, obviously it came in a little bit hotter than expected this morning. It's a lagging indicator. We have to keep in mind, and so we have real events that are happening in financial markets that will be leading indicators that they have to deal with. But again, it's kind of uncertain how much these two banks are tightening financial conditions at this point. I think as you guys mentioned, the equity market, hasn't really moved. Kind of the broad indices have been more muted relative to, some of the financial equity indices. But that's really going to be what they're focused on.
And Tiffany, Powell is in quite the interesting position here. On the one hand, as you correctly point out, he's dealing with a crisis, a banking crisis that has evolved in real time here, coupled with the inflation data, which came in hot on the services side, which he doesn't like, but admittedly on a delayed basis. I'm wondering, is Powell going to wear his macroprudential hat next Tuesday and Wednesday, or is he going to more be focused still on inflation? And is there a happy medium here that he can just kind of straddle a line?
Well, I think there is reason for them to actually pause interest rate hikes. I think it's very little cost for them just to do that. Still have, still communicate that they could start interest rate hikes, but just to see what happens. Let's see the fallout, from these two bank failures and the FDIC, the Treasury, the Fed announcements over the weekend to try to shore things up. I think it's relatively low cost for him to do that. And it could provide some information, could provide some time for them to try to assess what's going on. But again, overall, this is a balancing act, as I suggested. And the Fed, ultimately, in order to pause, like I said, they will have to deem that uncertainty around financial stability risks is higher, than some of the uncertainty around inflation risks. And again, I think because this is early days since the fallout, I think there is reason for them, to kind of tread a little bit lightly here, but nevertheless, you're right. Inflation is high, and they're going to have, if they do decide to pause, they're going to have to communicate very carefully, that, even though inflation is elevated, they are doing this for financial stability type of reasons.
Tiffany, even though I know the balance of attention has shifted to financial stability, I do want to dig into CPI a little bit here because it is interesting to see that continuing persistence, right, and stickiness of the acceleration in inflation on the core level. I know if you back out some of the components, I believe shelter is seeing a little bit of an improvement there. And if you look over the past 3 months, we are seeing some abatement. But do you think that, if the Fed does continue to raise, even in the face of everything else that's going on, is it going to continue to have a positive effect on these consumer prices?
I think the bottom line is that financial conditions, even before these bank failures, they were tight. And the Federal Reserve had put monetary policy at a place to restrict the economy. And that's why I say, the bank failures, they're not happening. They're symptomatic of these broader, the broader environment of tighter financial conditions. So ultimately, the Fed is hoping that brings down inflation. And I think, if you look at the components, of inflation more recently, kind of in what, some of the revisions that we've gotten, what you see is that inflation actually does, look relatively sticky at an elevated level, unfortunately. So there's a reason why the Federal Reserve has put monetary policy in tight, in restrictive territory. But I would have to say that, I think the policy is working. Inflation, with a lag, should start to come down. And obviously the Federal Reserve needs some more data in order to, to feel more comfortable about that. But again, I think to the extent that credit creation really starts to slow, you will start to see inflation coming down.
All right, Tiffany. So let's imagine in 1 week's time or so, you're sitting, if you were in the press lockup room with Jay Powell as he takes the lectern there. What question would you ask him? I've got a million.
Yeah. Well, I mean, obviously, you're going to know what he decided to do at that point, right? So the meeting will be revealing in that sense. If they don't hike, they do think that there is some lingering financial stability risks that outweigh, some of the inflation risks. But I think overall, like the big question will be, how are you thinking about policy moving forward? So even though you're pausing today, do you expect to continue hiking rates maybe at future meetings? Do you think policy is restrictive enough to ultimately bring down inflation? Those are the kinds of questions, I think people will be, they should rightly be focused on.
All right, we got to leave it there, but really appreciate your insights, especially on this economic report Latin morning here. PIMCO Managing Director and Economist Tiffany Wildling, thank you for joining us.